The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to CPA Academy. My name is Christopher, and I am so happy to welcome you into today's webinar on how our firm went from 100-plus-hour weeks to 40-hour weeks year-round, sponsored by Melio. And our presenters today are Ford Baker and Caitlin Kirkhart. Before we get started, I want to go through some housekeeping items and do some quick technical checks to make sure everything is working for you. So if you don't mind, find that GoToWebinar control panel located on the right-hand side of your screen. Find that drop-down panel labeled questions. If you can't, pop that open. We're going to have several uses for this one pane today. So right now, if you could drop me a note, let me know you can hear the sound of my voice. You can see our wonderful presenters and their slides up on the screen. And as always, let me know where you're listening in from today. All right, we have folks from all over. Welcome, 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 and thank you for taking time out of what I am sure is an incredibly busy schedule to spend and learn something new with us. Thank you so much. If you have any technical issues throughout today's course, let me know in this same panel. Keep in mind, there's quite a few of you and one of me, so I will do my best to get to each and every one of you as quickly as I can. And if you have any questions for our presenters throughout today's course, this will be where you can put them right here as well, too. We have a lot to go through, so if we don't get to your questions, don't worry. We will provide them in a report afterwards for the presenters to respond to as well. So now we know things are working, let's talk about our credit. This is a 1-hour webinar and qualifies for 1 CPE credit. The way you earn that credit, as always, is straightforward. Just stay logged in for 50 minutes of our allotted time and answer the polls. Today we'll have a total of 4 polls throughout our webinar. And in order to earn full credit, you'll need to answer at least 3 of those polls. So if you miss one of the polls, don't worry. We already have an extra one already baked into this presentation for you. And if you're having trouble seeing the polls, simply minimize your screen or try refreshing, and that usually works. Your CPE will be issued by the end of the day today. It'll be available in your CPA Academy account page, along with an archived recording of this webinar that you can come back and watch at your leisure as well. And last but not least, we have a PDF handout for you to download. This is located in the handout section at the bottom of that control panel, and you'll be able to follow along with our presentation. And with that, I will take a step back and hand everything over to our wonderful presenters. Ford, Caitlin, the floor is all yours.
Thanks, Christopher. Really appreciate it. Hi, everyone. My name is Caitlin Kirkhart. Like he said, I'm so excited to have you guys with us today to learn how our firm went from working 100+ hours a week to now working 40. I'm currently CCO at Baco Tech, and before working at Baco Tech, I worked for the firm that invented our tech, Baco Group, and I saw knee-deep in the workflow all the pain points that CPAs encounter at a firm, such as firm efficiency and what they're looking for, which is work-life balance. So we're going to dive into that today. But before we go ahead and dive into the webinar and introducing Ford here, I am going to pass it over to David to launch our first polling question.
David's not. David, you're muted.
Sorry about that. It was still on mute. We want the what tax workflow solution, or is it individual practice focus?
Individual practice.
Got it. Perfect. Got it. No problem. They weren't numbered. And let's launch that poll here to kick us off. So what is your individual practice focus? Tax, audit, advisor, informational services, governmental / nonprofit, industry or / other. So.
And while y'all are doing that, I'll jump in and answer the polling question. For me, I'm on the tax side. I did start at audit at one of the big 8 at the time, that when Deloitte Haskins and Sells was called Deloitte Haskins and Sells. That's when I worked there. I came back to Dallas and started with a local firm here that was a pretty good sized firm. It was a completely paper workflow. We converted to an automated process throughout the 90s, and that's basically where my story kind of picks up. But I'll let David wrap up the polling question. I'll get my introduction out of the way. Like to be efficient.
Got it. I'm going to go ahead and turn off my camera as well. I feel like I'm having some bandwidth issues this morning. So let me hit stop on the close the poll, and we're just going to do a share quickly. And most of you that are attending, you're either in tax, or some of you are doing your internal controller, you're doing industry other. But so most of you though is tax, and I think that's good because I think a lot of what Ford's firm, they do a lot of tax. So she will
We
be able to
do.
get all the learning through this. Perfect.
If you want to go ahead and chat, and I know your industry slash other, we'd love to know what industry, as well as if you have any questions along the way, we might have time for a Q&A, so we'd love to help answer any questions at the very end. So feel free to chat in.
So I'll just kind of jump into the story. What happened, obviously going from a 100-hour work week to 40-hour work week is something that we have focused on a long time in my practice. Like I mentioned, I worked through almost a decade for that firm. We went from a paper flow in 1994 was the year that we actually put in a server. We were using ProSystem FX at the time, and we were processing all the returns instead of typing them. So I saw that transition take place completely over the 10 years or a little less than 10 years that I was at that firm. By the time I leave in the late 90s, though, something had happened, and that was that I was working more hours as a manager than I was as a staff person. And as the next 10 years unrolled, it got to be worse and worse and worse every single year, to the point that I got to where I weighed almost 400 pounds. My life had gotten out of control. My firm was running me. My partner, Julia Ford, last name and first name the same by coincidence, doesn't make her my daughter, but she was actually sleeping on the couch while she was pregnant at the office. We were working 100 hours. I had a cot in an extra office that I slept there because I couldn't afford the time to go back and forth. That's my son in the picture. He actually was born March 24th, and I probably half of his birthdays were celebrated after April 15th because I did not have time during tax season to work with him. And so 2012, I had a light bulb moment. I ended up losing a lot of weight. I wanted to make sure I kept the boundaries around that. I had to make a lot of changes in the firm to get there. Ended up riding my bicycle in 2014 from Canada to Mexico down the Pacific Coast Highway. So I'd found some time to take off and do things a little bit differently, but I definitely, a lot of that was perpetuated by changes I made inside my practice.
So you made these changes in your personal life and then incorporated them into your firm. So take us along the journey to how that happened exactly.
Well, what I would say I had to do is I had to trim a lot of fat at the firm, and I followed a lot of the things that the industry was telling me I could do. I used more tools. What I ultimately learned was something like SurePrep, which I think is a great tool for my 1040 practice. We don't scrimp with it anymore. We do the state side. Anything I can do to expedite the process of putting last year's numbers on last year's forms, so I can be proactive in talking about my clients this year. During the pandemic, my clients, I already had all of the information. I already had a trailing 12. I did not know there was going to be a pandemic, but we had just created some proactive solutions that allowed me to stay connected and in the now with my clients instead of always behind. But we used a lot of solutions. We followed a lot of the guidelines that people said, but there were a couple of things that I changed internally that made a big difference. One of those was what I called as delivering a standard of excellence. And I used the Lexus logo because I thought that was there. But that's actually one of the local dealerships here that has the standard of excellence.
Which is funny because Ford actually doesn't have a car, but he used an example of the Lexus.
But I'm going to talk about a standard. My bicycle is a Specialized, so it wasn't going to really work here. But if you just have one car, my wife drives a Lexus. And so, but they deliver a standard. When I first bought cars, I bought a truck. I actually bought a truck that had electric windows, but manual locks. You could hit anything you wanted on a car and go checklist by checklist by checklist. And as we know, the Chevy and Ford products went through a period of time, in the 80s and 90s where their quality fell off. And Lexus delivers a set of packages. They know that they're going to deliver you a consistently good product that all fits together well. And so if you get package A, package B, package C, everything's thought to work there. Their service is excellent. And so what I learned was I needed to value the collective value of all of my clients far more than any of my individual clients. That didn't mean I didn't want to give excellent service, but what I discovered is, and what I now know is, that I can give better, consistent service by providing the same service to all of my clients than I ever could when I was trying to do a very different workflow for every single client. trying to give extra service here and there. And there was no consistency in it. We as CPAs all work in a workflow that is, what did we do last year? And that's very inefficient because it's different for every single one of our clients. So that was one of the very first things I did. And there was a process I went through of converting my reactive issues into, or converting a reactive issue to a proactive issue. I don't know that I actually had these words in mind when I did it, but it is in effect what I came up with. And there are 4 different buckets that consistently create reactive issues. And the ones that I think are most bad are the repetitive ones, the ones that happen over and over again. Reactive, 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 reactive. I'm never getting anything resolved, just reacting, reacting, reacting. The other ones are very old reactions. So something from a year ago, 2 years ago, that I can't plan to be reactive because I don't know what I'm going to react to. But I can plan to be proactive, and a lot of that is by eliminating things that I'm going to react to in the future.
Right. So how did you go about moving your firm from being reactive to proactive? What examples could you show us?
I had to identify the reactive elements inside my workflow, and they fell into 4 buckets. I have reactive issues with clients. I have reactive issues with the IRS. I have reactive issues in our billing process, and I have reactive issues in my communications. And if I jumped into clients first, we tried to identify what those. I knew I could identify where my clients that were that didn't like stay current. They were always behind, and it was, if it was on their taxes, things like that, they were going to impact all of my other clients because the next year they would have some urgent matter during a deadline. These guys were all current. And everybody, all the rest of my good clients were current, and I was having to catch these people up. So as soon as you didn't file a tax return in our firm, you were no longer a client. That was a condition to get your tax return done by us, is that you stayed current, because I valued the collective value of all my clients more than anybody else, and they were going to disrupt me later on down the road. We also went through a process. We're now a lot more efficient, so we're reconsidering this now. But while I was trying to figure things out, I would not do any catch-up work. If a guy came in and he hadn't filed a tax return in 5 or 6 years, and he needed me to catch him up at a deadline, prioritizing him over a client that had been good for the past 5 or 6 years punished my good clients. And so we just didn't take it on. There are a lot of firms that look for that, and I let them do it. We can now catch people up a lot quicker than the firms that are not in this workflow. So we've considered taking on some of that. We've used a lot more automation tools that make it a lot more efficient. But at that point, we didn't do anything. Anybody that stayed was behind. And a big deal was software. If you used QuickBooks, back then, 2007, and it had sunsetted, we would not take that file in that 2007 format. Eventually, we only kept the current version of QuickBooks on our server, and I had access to my clients' QuickBooks files, so everybody had to be on the most current version of QuickBooks. I don't think we're all aware what that driver does that manages all of the QuickBooks files, so it knows which one to open. What that does when you have very old software on your program, it loads every night, and it slows down all of your processes for 1 or 2 clients that don't want to keep their program, up to date. They don't want to pay the fee. That impacts all of my clients that do pay the fee, and it's not a good way to go. And so we did not. If you were not wanting to keep your tax software, your QuickBooks software current, and you were going to send me the file, we were either going to convert it to the current version, or if I had access to it, it had to be the current version of QuickBooks. And the other one was clients that create reactions. These are repetitive. You know who they are.
We all have bad clients, and unfortunately, I had, being an assistant and also working in communications at the firm, I'd run into a rude client. Who would have thought? There are clients out there that are jerks. I know we've all encountered them. Fortunately, one client, we just asked him to upgrade his QuickBooks, and he unfortunately did not agree with that and called me cursing at me. So Ford, what did you do to handle that?
I'd let him go. And a client like that is not only going to, I just don't like that kind of behavior with my staff, but a client like that is going to create more and more disruption, because they're going to get together and talk about it. Caitlin loves to talk, but she's on this thing too. Can you believe what he said? And everybody else is going to talk about it, and then they're going to say, oh yeah, well, I was on the phone with him once and he did this, and these stories are going to get retold over and over. It's a constant disruption that nobody really wants to deal with that guy, and it's a constant going over and over again. We let him go. They talked about it one time. Everybody was happy, and now his name doesn't come up except for when we do webinars.
An example.
So, but the idea was name didn't come up. But
yeah.
the other one is people that don't have boundaries. Boundaries became very big for me. But if you're going to be late and create a lot of disruptions, if you're going to show up unannounced, if you and I are going to be in a meeting, you're going to take cell phone calls, or you're going to text while we're in a meeting. If you're going to do things that are going to slow us down from trying to get things processed and get out the door, impact other things, but we just didn't want them. I have had clients that were very big clients that did not have boundaries, and I let them go. The second issue is the IRS. A lot of people think that the IRS is something that we really can't deal with effectively, but you can be very proactive with the IRS. Actions I take today can positively impact what's going to happen inside my firm 2 years from now, 3 years from now. One of those is notices. We go through the process of getting a power of attorney from every one of our clients.
And it's a standard across the board. As soon as a client comes on board, or even if they're previous clients, once we started to do this, we as admins, me speaking as my office manager and I, we ran a POA or gathered a POA for every single one of our clients. What was it, 2 years before and 3 years ahead?
3 years behind.
There you go, 3 years behind and 2 years ahead. And the purpose of that is so that we're not scrambling on the filing deadline, trying to figure out what kind of a transcript we need to run in order to best collect the correct information for to get return.
Yeah, I just didn't want to get a notice 2 years from now that said I didn't have something on the return. And so if I could look and see what the IRS had and make sure I matched it up. I did a daughter's tax return. I did a client of mine's daughter's tax return. She'd opened up a shop, and she had filled out her credit card processing slip with her social security number on it. I did not get a transcript for that client. And we spent 3 years trying to move that from there to the social security, to the S Corp, trying to get that data moved over when they started to send her the underreported notices. So the idea that I didn't do it, if I had it I didn't get an engagement letter for them, it was a mistake in that process. I missed it. And had I done it, I would have saved myself a lot of time. Not going back over those notices is something that makes a big difference in what our workflow looks like now. The other one are audits are very reactive, but I think people are surprised by how preventable they can actually be. We handle audits a lot different than everybody else does. A lot of other people, I hear people say I lock them in a corner, poorly led, make it cold, things like that. They're humans. We treat them well. We spend time with the agents, and I cannot buy them lunch, but I can't sit down at the same time they have lunch. I've heard a lot of people say that's a no-no, but I just ask them questions, and a lot of times they're not super responsive, but a lot of times they'll just start talking. How did this client get picked? What happens when you pick an audit? How do you decide what you're going to audit? And you find out a lot of things like that they look at a return before it's actually once it's selected for audit, but before they actually do any work, they look at a return and they look for key characteristics on that return to decide what they're going to do. They're looking for auditable transactions. And so if they see things that were on the transcript that aren't on the tax return, they're going to keep looking at that return. That often is what triggers the return, is that thing showing up in their workflow, is things that are missing on the things that are on the transcript that are missing on the return. But they also tell me how they like a tax return to look, and they're looking for auditable items. For that reason, we do not want to give them anything to audit. Everything matches the transcript, and we try to have an item that matches for every one of the items on the return. Therefore, I don't do any Schedule Cs. A Schedule C is got a lot of things to audit. It's the most audited form at the IRS. The IRS knows it happens with a lot of self-prepared tax returns. They look for if the tax return was self-prepared. That's one of the things they look for. Very different than one of the Super Bowl advertisers that proclaims everybody's a tax man. The IRS knows that's not true. So there's key things they're looking for, and there are things to audit. If it all matches the transcript, I had 2 tax returns with $100 million plus AGIs, 65% chance of getting audited that got selected and was in the workflow. We never heard from them. Everything matched the transcript. So there's a way to be proactive, and that's going to pay tax. That's one of the things they're looking for. So I don't want any monkey business on tax returns. That's going to create other issues as well. I want to create compliance. I want to save them every nickel I can without anybody going to jail for it. That's a big issue. And
it is a big issue. And if y'all have any further questions about the IRS or anything like that, because I know that we kind of had to do a high level because this isn't only an hour webinar, feel free to contact us. We'd love to help answer any further questions. But tell us more about billing and how that helped your firm.
I went to a flat fee billing. You guys have heard this a bunch of times. It eliminated, from my standpoint, I automated the process as well. So my engagement letters and my bills go out at the same time. I get a spreadsheet that I review. This is what I'm going to bill. This is what we billed last year. I still track time to see where my clients are profitable or not profitable, but I don't actually bill based on the hour anymore. And it's solved a lot of things. In 2019, I was at about 80%, 80+% realization, which is really strong. We're now somewhere around 240 to 300% realization. So we're not writing anything off. We're more effective. We're more productive than we ever were before with this efficiency. But our clients appreciate it, and it saves a bunch of time. I spent an hour last year on billing and engagement letters. It took 4 hours to pull together the spreadsheet for me. That's 5 hours, 6 hours for the year. That's not very much time.
And when I worked for him in 2017 to 2020, I had no idea prior to me working for him before that there was someone that was literally an admin that majority of the time handled billing and collections, and I had no idea, because when I started in 2017, the value billing was already in place, already set in stone. I was in Ford's emails all day, and I never even saw anything
No complaints about high bills. No complaints about
because
that.
there was a standard and they knew, and they were also treated very well with excellence.
And the last thing is communication, and this is email. Email is a very reactive. I'm going to ask a question, get an answer back, but bam, bam, bam. It's constant interruption. It's a very ineffective. We did a lot of things without knowing what we were doing around it. Caitlin has, because she, in her communications role, has spent a lot more time on this. I'm going to let her jump in and talk about what we did on communication side.
Yeah, and so I mean, up front, I think modern communications is extremely overwhelming. In communications, we learned that too much noise coming in means that we as humans can't process that noise coming in, right? So multitasking is, I think, the biggest thing, right? Multitasking, as much as I as a millennial think I am awesome at it because I can dabble in some texting, some IM, some email, I'm actually not good at it because I'm never really fully committing to what I'm looking at in front of me. So here's just a few suggestions. We reached out to a lady named Marcy Rader, and she's given us some suggestions. She teaches CPAs as well if you want to connect with her, but she suggested just a few things. So first, in Outlook, if you log in, just turn off your basic notifications, such as whenever you receive an email, just turn off your noise, turn off whenever you get like an icon of an envelope whenever you receive an email, or just simply a desktop alert saying that you got an email. Turn those off and you're good to go, and you won't be as distracted. Next is working offline. I think Ford and I can both agree this is probably the most helpful thing that him and I have learned from Marcy, is that you're still able to access your email, right? You're still able to collect all of your inbox emails coming in the beginning of the day, and you respond to them, move them out of your inbox, and you're still able to access it if you need to go into your inbox, but you're not receiving anything new, right? So you're not being completely distracted by something that is apparently a client fire when really it can be answered later that day. And so I actually just check my email twice a day. Ford, if we're lucky, checks it once a day, as we like to say. I hate email. Because I used to be the person that handled that email. So it's really great. I think even for him as my employer, he loves that I don't email him as much. I still very much email him. I like email.
Sorry.
No, you're fine.
Okay.
But so, and actually next is the automated replies. And I love this. Ford taught me this when I was at the firm. Guys, just have a simple button set up for automated replies. So Loom, I'm not sure if you guys have heard of it. It's like Zoom, but it's a recording. So you can download this platform and basically record your screen. Say a client asks a really long, lengthy, annoying email about your taxes or whatever it might be. You can go into their tax return and say, hey, Mr. Smith, you owe this much. Here's your projected taxable income, and this is exactly what it looks like. And you can click that Loom button and email them back directly with the link to the Loom. And not only does it get out of your inbox sooner, you responding, but also the client feels valued.
And when they get done watching the video, they can't hit reply. So there's your.
Yes, they can't hit reply. And next is Zoom. Just simply sending them a Zoom or a Calendly link with a Zoom invite saying, hey, here's a link to my calendar if you want to connect about this further, because this unfortunately is going to be a little bit longer of a reply. And not only, again, does it get out of your inbox, but also the client feels valued. So it's a win-win both ways.
And some clients will eventually just go to that link because they know that's the spot they can get an email with you. They can get a conversation with you. And they don't mind that if they know they're going to get connected and get scheduled.
Right, exactly. They'll save it as a bookmark. And we're going to talk about annoying emails next. So how many of us receive annoying emails every
They're all
single
annoying.
day? Yeah. I like to think that LinkedIn's my biggest one that just somehow always ends up in my inbox, but man, do I want to get them out of my inbox and not look at them anymore. So what do? I right click on them and I simply just create a rule where if it's from LinkedIn or if a message contains this, then I will put it in a certain folder to where I can still access it if I want. However, I'm not going to look at it every single time it comes in.
Oops.
And lastly, we're going to talk about do not disturb. So Ford here makes a standard. When I was in my interview, he said, I do not give out my employees' cell phone numbers because accounting is not a life or death situation. And for me as an employee, I really respected that. So I decided if Ford's not going to give out my cell phone number to where I'm not contacted after hours, then I'm not going to be on my cell phone during hours. So I just have it automated to where it starts at 9 and then at 5 o'clock it turns off do not disturb. And Ford, why don't you tell them about your cell phone and how that helped you create better boundaries at work?
I'm a big believer that good fences make good neighbors, and you guys know who Gladys Kravitz, if you're my age, she was the neighbor on Bewitched that was always sneaking peek in the window, and that idea that these things are going to create a lot of interruptions in our day. I'm a better husband if I'm not dealing with work things at night. I'm a better CPA if I'm not dealing with play things during the day. So I have to create separation. Everybody's going to do things different. You can't work a 40-hour work week if you're bringing a bunch of collateral in from home. And you can't expect someone not to bother you at home if you're asking them to pay you to mess around at work. So the main thing is to set the boundaries at work and set them at home and do that going forward. And what I can tell you is for sure, if you follow these items, this will get you back Saturdays. Getting the billing alone is a huge issue, but the email is a big one as well. I'll talk a little bit more about going to the 40-hour work week, the biggest change, but we'll do that after this polling question. David? There we go. We have our polling question, which is, what tax flow workflow solution does your firm use? If you're in the industry, if you know the answer, let us know, or just I'm in industry. And we can get those answers in, but we'll talk next about the 40-hour.
Yeah, so obviously what we've talked about already is not a full 40-hour work week. It's probably about 55 hours whenever our that was the standard of how many hours the CPAs were working. Now we're working 40 hours at the firm. So next we're going to talk about what we did to exactly limit those hours.
I know here for the poll
that we've got about 43 seconds left.
No.
Or I'm sorry, 15 seconds left. I was looking at how much was already gone by. And then we've got about 8 more seconds left.
So obviously, I can begin talking a little bit early. I'm about 3 minutes long here, so I want to focus on trying to get caught up. But if I'm going to move from a 40-hour week to if I'm going to move from a 55-hour or 100-hour week, or that last gap, I have to have the least reactive things in my workflow. And putting last year's numbers on last year's forms is a reactive job.
And real quick, I just want to jump in and
you don't
say
have to,
that, well, we're sharing our results right now. So it looks like 47% is other, and then looks like it's right in between Intuit and CCH. So, all right, back to you, Ford.
Okay, so the 40-hour week is you're going to have the least reactive items in your workflow. And last year's numbers, last year's forms is still very old item. Clients are wanting to talk to us now. There's no value in putting last year's numbers on last year's forms. We use SurePrep, as I mentioned before. We can help connect you there, get you a discount. There's a lot of other things we've talked about, but what I discovered was, as many things as I could find, I could not find something that actually solved all of the problems that we had. Our solution providers are tasked with simplify, standardize, automate. That's their job function. Now my watch is going out in the middle of it. So that's their job function, is to simplify, standardize, automate the touch to a. If they do that well, they'll create a touch it once solution. Thanks. Would you kill that for me? Sorry. I turned off everything but an alarm that goes off. So if they do their job well, they create a touch it once solution. It doesn't exist for us. I became fascinated by the idea of touch it once. I was at a client's office that ended up teaching that to me. They're in the moving and storage space, and I'd been out there the previous week, done a job, and then at the last minute, I posted some last adjustments topside to get the financial statements out. They had about 70 files. The next week, I went out and had to get them to the bookkeepers, the adjustments, so they could post them in the books.
And what did they show you that changed your firm?
Yeah, they took me downstairs and they showed me they had offices all across the country. They had 8 monitors on a wall. They said, I'm going to turn on the warehouse and I'm going to turn on these monitors for 8 warehouses, and you're going to see nothing moving at all. People think that's a bad thing, but we're in the moving and storage business. There's no money in moving crates around a warehouse. They turn on the cameras, sure enough, nothing is moving. There's no money in moving crates in a warehouse, but there's a lot of money in not moving crates around a warehouse. And the only way you can not move crates is to touch it once. And the only way you can touch it once is to put it in the right place the first time. I was, of course, the last week was thinking, but yeah, you guys wanted the financials out. I had to get it done. But learning something from clients was a big change that I had to go through. And I realized we really didn't have anything to do it, despite a lot of noise around everybody telling us that we needed to give advice and advisory services. I almost have PTSD over the word advisory services. I see it all the time. This is just always bombarded at us. All these quotes that I've pulled up here from solution providers and publications and things like that are all from 2018, 2019, 2020, except for one. When they get down here poking fun at the CPA firm owners, that's actually from that first paragraph there is from 1994, where they're talking about indifference. If you read that whole thing together, it actually reads like one continuous sentence. The year I put the server in, the year we became fully automated, the industry was starting to notice something different, and that was we were trying to get out. We were losing contact with our clients. And so if Thomson Reuters and these folks, and we love Thomson Reuters, we've had great success connecting with them, but if they've written a lot of articles on it, if we need to be reactive, proactive, what do we have in your tech stack? What are you giving us to be proactive with? We went through their tech stack. Intuit, about half of what they sell to businesses on the accounting side. And this is only looking at their accounting platforms alone. So about half of what they sell is there. That leaves us with legacy desktop applications like Lacert and UltraTax and ProSystem FX. Now they have some cloud reactive technology where I'm putting last year's numbers on last year's forms. But just because I do that in the cloud does not mean that I'm proactive. So interesting to note, 85% of the solutions they give them by numbers are reactive. In Texas, that's exactly how much of the year we spend through November 15th, our franchise deadline, putting last year's numbers on last year's forms. When I look at what's left, I have some static research type things or practice forward from UltraTax. That's Paul Miller's platform. It's a great platform, but it's static. It's not really interactive in any way. I have my tax planning tools, which is proactive work, but it's interactive with last year's tax return. So it's more convenient than it is really giving me current data about what I need to be planning. I've only got one solution that will take a current event and tell me that what clients are impacted by it, and that is Access IQ. If the laws change, they'll tell me what clients based on historical filings, but that's a tough thing to build a practice around.
Yes. I know. Not what Intuit said.
What's Intuit saying we can't do it?
So Intuit said, touch it once is the most fundamental, or one of the most fundamental principles of productivity and time management. But in the world of tax preparation, it's hard to do, or as you said, it's impossible to do, according to Intuit in December 2016.
Yeah, if you read the article, they go on and they specifically identify that they make it pretty clear it's impossible to do based on what the workflow looks like, unless you use the article is mainly focused around keeping everything in Intuit. But what if I have a client that's not on QuickBooks Online, or ProConnect doesn't connect to QuickBooks Desktop? How do I handle that? What if I need something more robust than QuickBooks Desktop? Where's the solution that is agnostic toward those items. Where's the solution that works really well? So if I go back and talk about what they've done, and we try to see how things have changed since the technology came in place, and we go to that simplify. That's the first item on the list. When I was getting everything in paper, it came to the front desk, they opened the mail, put a rubber band around a file, put it on a partner's desk with a route sheet, and the job started. Now I can still get it that way, or I can get it in email, I can get Excel, I can get an email with Excel, PDF, a backup of the file, an accountant's copy of the file, which version, I can get faxes, I can go on and on. I can have to log on and get it. What they've done from a simplified standpoint, they've actually complicated it, because now there's a group that will go out and pull the trial balance and bring it in for you. So it's another option, but it's not anything that's replaced the others before. Nothing's actually simplified. It's only complicated.
Right. Too many workflows.
A ton, and emails are terrible workflows we just discussed. Then the second thing is the idea of standardizing it. Okay, so our job, our goal is to get last year's numbers on last year's forms. So the trial balance seems to be what everybody's landed on to do that. So I need an account like repairs and maintenance to go to line 9 of the 1120S, repairs and maintenance. That looks pretty obvious. That's pretty simple. But what about an account like computers? And especially if they don't have an account number. Like if I got $10,000 there, is that an expense or is that computer's fixed asset? And what if my company actually sold computers? I could have computers in inventory. I could have computers in revenues, and I could have computers in cost of goods sold. So the idea that we focused on this trial balance that really doesn't tell us anything, the thing about a trial balance is it's actually a tool that controllers used before as a checklist. It was the working trial balance back in the day. That tool has now become a standard, and it's not a standard. It's completely customizable, and so many of our clients don't understand what the account should be. So we've created the central of our workflow around a customizable element that the people that customize it don't even understand what they're doing. We didn't really standardize, we customized. And so rather than we've now complicated, customized, there's no automation that's going to come with that. That means we're going to manually insert, and that's create a touch it a lot. You guys that are in public accounting understand this very much. We do not have a touch it once solution. We have a touch it a lot solution. You can't Google touch it a lot without safe search on.
It'll get you fired. But also,
it's not a workflow.
Yeah, it's a bunch of busy work. And so we want to help the industry go back to what CPAs or accountants are made to do. And so how did you help your firm create your own efficiency in workflow in one spot?
Well, there were some things I did to create my own efficiency. Like I mentioned before, we had access to our clients' QuickBooks files. We kept them all current. And I had an application that I used when I did those financial statements that I could pull information out of the client's file. And then I started saying, instead of asking for certain things, I just said, give me everything. And so it would pull everything out. And then I realized, why wait to ask just every day or overnight? Just pull everything out of every file. And then if I need it tomorrow, great. If I don't, who cares? And so I pulled the data every night out of every file. And that gave me a couple things. One, it gave me everything in kind of a consistent format. Most of my clients were QuickBooks Desktop at that time as I was developing this. And I started playing with the idea. That big client had a 7,208 line trial balance, and I could drop that 7,208 line trial balance in 2018 into this massive spreadsheet that would then convert it to a firm standard set of tax, what I call tax leads now. So I could convert them all. So all my returns had sort of the same format when we got them into Lacert at the time. And then I automated about 5,000 lines of tax adjustments. In 2018, the client sent me the second to the last trial balance on accident, and I had to drop in the new one. All this was completely automated, and I just dropped in the file and picked it back up. I didn't have to worry about figuring out all the changes I needed to make. Everything was completely automated on the calculation side. It has a massive M3 that is on this gigantic schedule. You can imagine the complication with this in Excel, but I just wanted to prove that you could actually automate the process of doing the return. And then I would develop an exported report. As you can see here, this would export out to Lacert, and I could change it from federal to state or each location and prepare the local returns as I needed to, or the consolidated federal partnership return. I did all of that inside of an Excel spreadsheet. At the same time, most of my clients didn't look like that. They're the typical small business returns. And I just wanted to prove, could I actually work everything from year to year forward? And so on this spreadsheet, you can see I'm converting. In that blue column was where I dropped data in. The yellow column is calculations, and the green was ready to export to Lacert. I handled all the rounding in the background. So it was a consistent, efficient way to do it. I proved I could get the calculations, but I also discovered something else, and that was that I was still doing everything based on that balance, on this trial balance at the end. And ultimately, I realized that all of the efficiencies I was actually seeing was because when I gathered everything, I gathered the transactions. And that customizable tool of the trial balance was the problem. I didn't realize it completely at first, but I realized my efficiency was coming because I gathered all the transactions in the background. This is actually from what we're doing now. And you can see on the screen here, I've got a Zero client, a QBO client, and a Sage Business Cloud Accountant client where the transactions all sit in the same database. They're all the debits on the left, credits on the right. That's a standard that works across all the platforms. We convert it to plus and minus to create an easier calculation model. But that is a standard that every accounting platform follows, and it's also easy to gather. My clients don't have to send anything. I don't have to ask for anything because we get it every night. The other standard we look for is, we didn't use a trial balance to work with off of this. The standard we worked with, kind of shocking that we hadn't figured this out yet, but every accounting software package, you can see the same thing, is going to deliver a classified balance sheet and a classified income statement. I'm going to have current assets, fixed assets, other assets, current long-term liabilities, and equity, revenues, cost of goods sold, expenses, other income expense. Now you're seeing those same companies all lined up side by side because they all report that in one manner or another. So once I connect to Xero, or once I connect to QuickBooks Online, which we've done both of those, and Sage Business Cloud, I've connected for every client because clients cannot go in and change that. Now that's a standard, that's simplified, and that's how you get ahead. We can create alerts out of transactions. We can create a lot more and be proactive like we never were before. We don't want every transaction, so our software actually just tells us the important ones based on how we define what is important. But we don't use, our solution does not use that trial balance. The solution that makes a difference is using accounting standards, accounting principles, which we as accountants understand obviously far better than our solution providers. That is, debits on the left, transactions we gather. We pull the chart of accounts every night with the account type, and we identify that repairs and maintenance is an expense. So we know repairs and maintenance goes to line 9 automatically. It works really well.
And there's nothing more that Ford loves more than figuring this out and putting it into Excel. We always say if I walk by his office and he's got a smirk on his face, it's either because he's on Facebook, bringing up those boundaries that he was just talking about because he saw a funny meme, or he developed something in Excel and he thinks it's super cool. So yeah, we got something patented because of this Excel spreadsheet that
we're super proud of this. I did not know this was a thing, but it got in the highway program, and for expedited processing, our patent was accepted exactly as we wrote it 9 months after we wrote it. It's all alone in the space. It is an accountant solution that has delivered incredible results. My director of tax and accounting services inside our firm worked 9 hours of overtime through March 31st, April 15th. The week before April 15th, which we treated as the deadline, he went with his wife to California to go to a shower.
A baby shower.
A baby shower? Yeah, he does shower occasionally here too. But it's a normal work week. Things like the freeze in Texas didn't impact us because we've been working on it all year long, and it impacted us because we had broken pipes and things. But those things that happen during tax season every year shouldn't surprise us because they happen every year.
Right, being proactive has helped us, whether it's the pandemic or it's the freeze. But so what we're going to talk about right now is
I'm going to jump to the platform.
Yes, we're gonna talk about the platform. We are going to talk about Bacotech though. So Bacotech is basically where it was developed, which is Baco Group, and it is a middleware software that is a centralized location for an accounting firms or a client's accounting software and a tax software. So we're right in between where our software talks to other software. So Ford, show us how Bacotech is like the thermostat of accounting softwares instead of being just a thermometer.
Yeah, so we call it a command center. We're able to look at real time what our client data is. This is a pretend client that we brought in, a pretend firm that does a lot of different returns, but we're going to look at this ABC QBO company, and we can see right off the bat inside our, oh, I'm sorry, I'm in the search center. We can see right off the bat that, well, okay, sorry, we can see right off the bat that inside my groupings, we've grouped everybody together based on ownership. And so I can see I've got a couple of different files here. Those are those same 3 ABC companies. I can move those out to create them so I don't see them all together. And I hit apply, I would look at just those 2 alone. But if I want to see the consolidated entities, I can just drag and drop. So creating consolidated reports for our clients that maybe own a rental property and their business, or they have a couple of different businesses, so we can do a tax plan with all that information side by side, is easy to do because all 3 of these platforms work on accounting standards, and we use that to gather the information. I can go into the benchmark center, like I mentioned there. I'm not going to save it because I actually didn't. I can go into the benchmark because I actually didn't make the change. So I'll say, no, I don't want to save that. And inside the benchmark center, you'll see I can see an income statement. I can share this with my clients as well. So they can see how they're doing. And in this case, this company's lost a little bit of money this year. We maybe need to meet, talk about some ways they're going to turn that trend around. But I can create alerts inside this as well. A lot like you do with online banking. You know, I can see, oh, I've got some retained earnings. The balance changed since yesterday, so I may need to go see if they voided a check. I can look here and see, oh, they've got something they coded to penalties, and it's a American Express. That's a deductible item. If I want to make that adjustment back to QuickBooks, I can do it from here. So I can just post that, put that in bank charges, or if I want to make a TJE to move that to somewhere that I would know would be deductible, so I don't accidentally not deduct the penalty for paying my credit card bill late. That's a deductible penalty. Only penalties for breaking the law are not deductible. And so, but here I can see in payroll taxes, I actually have a penalty. So if I want to move that to a non-deductible penalty, we've created some M1 accounts that we append inside our workflow to actually make it so that I can make sure that goes to a non-deductible item. I can see fixed assets. I can add them real time. You see all of these are 2021 activity. It's not last year. So it's things that happened in April this month. I have something that needs attention. Look, a client posted something in Ask My Accountant, and I need to answer that question from last week or yesterday, not last year. And then we have an account that we call Tax Significant. I'm going to show that over here real quick by showing what we do around automation and what you can do around automation. An account like accounts receivable is going to be on a cash basis taxpayer is going to be an account that I want to reverse automatically. We want to start working with our clients always on an accrual basis because that's how they're best benefited. It's not going to be on a cash basis. How can we get them ready when they want to go for their first audit or when they want to go through some venture capital, when they want to gather money? We need to teach them, you know, what's a prepaid look like. And we can get in this workflow and actually do that. So we want to be on an accrual basis, not a cash basis, and we want to be able to reverse our transactions automatically. So you can see this tax significant account has been marked to automatically reverse, and we reverse the transactions on a monthly basis inside the workflow. So real time, we're gathering real information, and I can see that a client, not only can I see their income statement on an accrual base, where this would tie directly to QuickBooks, but I can also see this on a tax basis. And I can look at this company. I've already reversed all the transactions, and I can see, oh, they've actually got a bunch of taxable income. They had a bunch of receivables they collected at the beginning of this year. They're thinking there's no way they owe tax, but look, they've got a bunch of taxable income. I can be in front of that problem. And last year, when I'm ready to file the tax return, I just come in, I pick the client I want to do, and I view my tax balances. All my AR has already been reversed. They don't have inventory. I mark that as tax significant. Let's assume I've already got that cleared. And so I push that as I push that directly into Lacert, and I filed the tax return. If they keep their payroll in a separate file or in an Excel file, then all I need to do to file both of those together, because we've created standards for how all of this gets reported, is just pick 2 companies, and I'm now ready to push that directly into the tax software. So now if I click on cash, you would see I have the cash for both accounts, all the different accounts that would aggregate into cash, and it's ready to go into the tax return. I'm doing all this way before the end of the year. So at the end of the year, we're just pushing buttons and filing tax returns. We finished about 90% of our work before March 15th-ish, March 31st. We do a lot of property tax returns that create some complexities because they all have different jurisdictions they're in. So we finished most of our returns start and finished in February after we got all the property tax returns out in January, and we're back to working on clients' 2021 tax returns now.
And
so
we're doing advisory services just as the industry said we should.
Joe's sending out first quarter estimates that says this is what your taxable income is without asking the client. You want to get together and let's talk about it. We're being proactive. We're reaching out to them. Like I said, we feel like we're about we are 3 times more productive than we were in our reactive workflow.
Right. Yes.
But I want to give David a chance to jump back in now. David, I'll hand it off to you.
Our last polling question.
Oh, I'm sorry.
Or sorry, third polling question. My bad.
Third polling question. So this is about following up with Baco Tech. I really like how your lifestyle change you made for turned into a piece of software at the end. Like it was a lifestyle change that turned into the way you worked at your firm, which led to the way you worked with clients, which eventually led to you creating software. I love how that story, and it's all really tied to just this change of priorities to some extent.
It is,
Thanks,
and absolutely, David. For me, the most valuable thing I can provide the industry is work-life balance. I know a lot of people look at tax season as their profit center. We collect all that money before you do, so we're still collecting the same revenues. It's just it's a change in perspective that's really going to make a difference in accountants' lives. We're seeing it inside our firm. They're working 40-hour weeks. It's exciting to see. Our clients are connecting with us. We get good Yelp reviews. I don't even know that we ever had Yelp reviews before. So that's or Yelp or whatever they were using. I don't know where they're coming from.
It is Yelp. But if y'all have any further questions about, like I mentioned earlier, communications, feel free to reach out to me or IRS stuff, whatever it might be about firm management. We'd love to help you guys out.
And you guys in industry, reach out if you want to talk to someone that's being proactive on returns. We'd love to share with you. We work across the country, so we can help anybody there too. Or tell your accountant about our workflow.
Got it. So I'm going to go ahead and share my screen here, and just Melanie who made this presentation possible today, and I really, really do appreciate it. It was excellent, Caitlin, it was amazing. But I'm going to just do a quick little presentation about Melio, as long as I can figure out which screen I want to share. Screen monitor 2, perfect.
It's so nice to see you on these things all the time, struggle with this as well.
Well, it's going Zoom to go to webinar to some other platform to some other platform. It's always this dance platform to platform. So hopefully you guys are seeing a purple screen right now. Yes, no, I think so. Yeah. Got it, perfect. So I'm going to give you a quick little 5-minute pitch about Melio, and just hopefully at the end, if you guys are interested, we can my team can reach out, give you some more information on Melio. So this is a little bit of background on me. My name is David Leary. I was at Intuit for almost 22 years. I started doing tech support for QuickBooks DOS. My whole career was QuickBooks. The last 6 years of my job at Intuit, I really spent time launching apps, the apps you love, the T-Sheets, the Hub Docs, the auto entries, the receipt banks, all these apps that you use inside your firm that integrate with QuickBooks. I helped launch those apps on the QuickBooks App Store. And along the way, I've left. I had some few learnings now that I own my own small business, which is interesting. I didn't have that perspective before. I was at auto entry. Auto entry got bought by Sage. I left auto entry, and about the same time I was discovering Melio for my podcast, I actually Melio reached out to me, and January of last year, I joined the Melio at Melio. All my contact information is there. It's my cell phone. Do not call it because I'm doing webinars like this, but feel free to text me if you need to text me. But in general, I'm very easy to get a hold of on any of the socials or any ways you want to get a hold of me. Just a little background on my title. I took that word evangelism from some other roles in my career. And at one level, yes, I'm supposed to be out here screaming how great Melio is, but really my more important part of my role is to go back and explain to our founders and our product developers and product managers all the important things accountants and bookkeepers need to do their jobs correctly, and then so that we build the correct product. Just a couple quick takeaways about Melio. One is we have dedicated accountant support. Everybody that comes on to the accountants team at Melio, I force them to become certified in QuickBooks Online. So that way, when you're speaking with somebody, they can speak your same language. We have an email address, accountants@melio.com. We have a landing page for accountants. It's melio.com/accountants. And then you can always contact us right inside the product through a built-in chat. A lot of people ask, like, what does the name Melio mean? Where's the name come from? Essentially, an easy way to think about it is just Melio equals better. So what is Melio? Melio is very easy to use payments and receivables. And when I say very easy to use, think like Venmo, PayPal, or Zelle, but it's actually just for small business. In fact, our founders were at PayPal when PayPal bought Venmo. And so there's 3 tenets of Venmo, if you guys have ever used Venmo, that have carried through over to Melio. One is free. One business can pay another business for free. Just like in Venmo, one person can pay another person for free. If you do anything special, like an instant deposit, things like that, there's a fee for that. It's very easy to use. If you've ever used Venmo, anybody can just get Venmo, install it, and use it. Melio is the same way. Anybody you put into Melio, any clients, they can just use it. It's super easy to use. And then the third tenet is the crisscross of how you want to be paid. So if I pay Ford through Venmo, Ford doesn't care if I use my checking account, my credit card account, if I use my Venmo balance, and frankly, I don't care what Ford does with the money once he gets it. So the beauty of Melio is now for small businesses, they can do the same. If I'm a small business owner and I want to pay somebody with my credit card, I can do that, and the business getting the money, if they want to get a paper check or an ACH or an instant deposit on their debit card, they can choose to do that. So that crisscross is there, which really gives a lot more flexibility and creativity. So just really who Melio is for. If you think about the solutions on the market, you have people that are using bank websites for free, paper checks, hand printed checks, right? They're not really free, and that's why I put the word ish there. And then you got your expensive and complex enterprise software. So this is where you're going to have 5 approvers to get a bill out the door. The problem is most of your clients over here on the left, they don't need that expensive enterprise software, right? I made this slide with 90%. I've done some webinars and surveyed people. It might be as high as 97% of your clients don't need expensive software like that. I've had some people talking about it. It's like smashing it out with a sledgehammer. Sometimes the way to think about that software. But there's always been a gap in the market. So for the last 8 to 10 years, you either put your clients on an expensive piece of software or you told them to use the bank website. There's never been software that's came in and filled this gap. And Melio is the first app that's came in and filled this gap because Melio is free. So now there's no excuse for your client to use website for banking if they can use Melio for free. Right? How it works loosely, you snap a photo of a bill or you just sync it with QuickBooks. You choose how you want to pay, the vendor gets paid. A quick review of the cost, it's free. There's no monthly signups, no subscriptions, million checks, ACH. There's only charges and fees when you do things that are special. So if you want a paper check FedEx, we're going to charge for that. If you want to pay by a credit card, there's a charge for that. If you want a payment instantly, there's a charge for that. But basic bank transfers and basic mailing of checks is totally free. And anybody signs up, they get an accountant's dashboard. You can just add them to QuickBooks, and then you get all your clients on one dashboard. And since we are a little short on time, we're going to skip this paying of the bill. I'm just going to go into our last survey questions so that the housekeeping by CPA Academy can take place here.
I did want to say we actually, as a firm, we use Melio and we are big fans of it. One of our tax and client services director actually wrote an article suggesting how it is a great product. So we ourselves, as an efficient firm, definitely value Melio. And
I'm using it for my own business, so it's not just like I work for Melio, like I use it in my own small business now.
There you go.
I mean, that's how we essentially handle any bills we have to pay for the Cloud Accounting podcast or any sponsorship income. We put it all through Melio, both the AR and the AP side. So it looks like we'll leave this open because this is the last polling question. So if any of you snoozed and missed the polling question, this is the one you want to get in on, or so you get your full credit for your CPE. We'll get another about 10 more, 15 more seconds for people to get in there and answer that question. All right, I'm going to go ahead and close the poll. And am I still sharing? I'll stop sharing.
Yes, you are.
There you go. Now it's just our video, right?
Yes.
Yes.
Thank you so much, Ford. Thank you, Caitlin. I do appreciate it. It was a wealth of information. It was really, really great. I do appreciate
I hope we
it. It was
didn't,
very well
I hope
done.
we didn't overstay our welcome. I was trying to make sure I got you the allotted time at the end. So
Yeah, Christian, or it's Christian, right? The CPA Academy. I'll let you wrap up whatever you need to do.
Christopher.
All
Oh,
right.
Christopher, sorry, my bad.
Hey, close enough. It's totally fine. I know you're talking to me. So with that, we are going to wrap up today's webinar. We here at CPA Academy will process that credit later today. It'll be available in your CPA Academy accounts within 24 hours. Everyone will also have the opportunity for a full webinar evaluation. Those links to the evaluation we found in your CPA Academy accounts, as well as your email. And special thanks again today for our sponsors at Melio and for our wonderful presenters, Ford and Kelly. This was a fantastic presentation. We are so appreciative of everyone's time and insights. And as always, a warm thank you to all of you in the audience for taking time out of your day. While you're in your accounts, take a look at the other webinars and resources we're able to offer. We hope to see you all on future webinars. Have a great rest of your day. Thanks again, Caitlin, Ford, David. Thank you.
Bye, everyone.